To be financially unstable is a situation. Now that is completely understandable. But at this point in time, where there is internet, there is availability of mobile phones that are accessible to that internet, there are cryptocurrency and there is various cryptocurrency exchanges. Okay, there are various cryptocurrency exchange platforms like Binance, Bybit, OKX, KuCoin, and thereabout. Then I'll say to stay financially unstable is a choice in this generation. Okay, because with these accessibilities I just mentioned, I have come to a conclusion that you have that power, the power to elevate your financial status. Guys, if you haven't done this already, then I think it's time to take control. Okay, break free from this cycle of uncertainty. We all know we are here because you're ready to make that change. You're ready to learn, grow, thrive, and that is exactly what we are going to do today with Binance Spot Trading. So spot trading is not just about making profits and all of that. It's about building a future. It's about creating a safety net, achieving financial freedom, guys. It's about securing your dreams. I've made this video as a beginner guide because I have received and I am still receiving a massive amount of requests every single day from people who are contacting me wanting to learn about Binance spot trading, arbitrage, futures trading, and thereabout. But what I came to observe, what I came to notice is that most of these people have little to no experience on how crypto actually works or how they can trade spot to achieve profits in the long run. Okay, and it is technically impossible, almost impossible for someone to just get into a market without knowing his ways or her ways around that market. All right, because at the long run those set of people might end up being at the losing point. All right, so this video will teach you the fundamentals, the basic but yet the most important factors you'll need to learn as a crypto trader. All right, we'll talk about what cryptocurrency is. Now, according to Wikipedia, cryptocurrency or crypto is a digital currency designed to work as a medium of exchange through a computer network that is not reliant on any central authority, such as a government or a bank, to uphold or maintain it. It has a financial point of view grown to be its own asset class. What this simply means is crypto is a currency that is run through a computer network, and this type of currency is not governed or controlled, all right, or reliant by any government authority. It is independent of any bank. That means banks do not have a say on what is going on in the crypto world, neither do governments. All right, you can only it is only safe to say that a government can ban crypto in their country, but they cannot tamper with the activity going on in the crypto world or market. All right, so knowing what cryptocurrency is, we are going to head on to what cryptocurrency trading actually means. Now, according to plus500plus.com, this website, it says cryptocurrency trading means taking a financial position on a price direction of individual currency against the dollar or against another crypto via crypto to crypto pairs. All this English boils down to cryptocurrency trading actually means exchanging cryptocurrency for a dollar, okay, or exchanging one cryptocurrency to another cryptocurrency to make maybe payment or to generate income, to make profits. And in some cases you can generate profit or make payment or use cryptocurrency to actually exchange against other fiat currencies. Okay, when I say fiat currencies, I mean currencies that are used by a particular nation or a government. Okay, currencies that are used by countries. For instance, the United States uses the American dollar, the US dollar. The Canadian dollar is used by Canada, Japanese yen by Japan, Nigerian naira by Nigeria, okay, Ghana cedis by Ghana. So that is what fiat actually means. Okay, it can be done through the P2P session that is provided by the centralized exchanges. All right, now having known that, we are going to look at what what a blockchain actually is and what cryptocurrency wallet actually is. Okay, so a blockchain is a decentralized ledger, okay, of all transactions across a peer-to-peer network. Using this technology, participants can confirm transactions without the need for a central clearing authority. Okay, what this actually means is, it is whenever you hear decentralized, it means there is no third party involved in this transaction. Okay, centralized means there's third party, decentralized means there is no third party involved. It's just from the buyer to the seller, from the sender to the receiver. Okay, ledger of all transactions across a peer-to-peer network. Okay, whenever you hear network in cryptocurrency, it's just like let me say a SIM card. You know, different companies have different SIM card, and different telecommunication network rather have different SIM cards. Okay, like back there in Nigeria, they have the MTN, they have Globalcom, they have Airtel. So whenever I want to recharge my MTN SIM card, I cannot go to buy Airtel recharge card to recharge my MTN SIM card. So same applies to cryptocurrency. There are networks also known as the BEP20, TRC20, Polygon network, and Solana. There are much varieties of networks when trading cryptocurrency. So whenever the buyer or the sender wants to send cryptocurrency to another receiver, he ought to ask the receiver, what network should I use? What network are you using? If it's the Polygon network, then the sender is going to send that money or that crypto asset from his Polygon network, okay, indicating to the platform that I'm going to use Polygon network because the address provided to me is a Polygon network. Okay, so if the sender mistakenly used a Polygon network and sent it to an ERC, which is an Ethereum network, that money is at a high risk of being lost forever. Okay, so you ought to know that the network that is going to be used to make both transactions is going to align and be the same network. I don't know if you got that. Now, take for instance, I want to receive BTC from a friend of mine, and he asked me for a network. Okay, the network I'm going to use. All I have to do is to just go to the wallet section. Okay, when I do that, it's going to bring me to an interface that looks like this. All right, there are various crypto pairs you can see. Let me show you. So what you're going to do here is click on deposit right here. All right, when you click on deposit, it's going to bring you to another interface. So guys, it's going to display list of different tokens, and since we want to use BTC as a case of example, you can see on the trending section right here, BTC is already present here because it's a popular and well used assets. So I'll just click on BTC, and if it opens, it's going to ask me to choose the network. Okay, this is where you find various network BTC is operating on. These are all networks. All right, they're all networks that can be used to send BTC. All right, we have the Ethereum, the BNB chain, the smart chain, the Lightning network, and so on and so forth, and the main network used by Bitcoin itself. So assuming I want to use the BEP, which is the BNB chain, BEP20, I'll just click on BEP20 right here. So when I click on it, and I'm going to notify the sender that I'm going to use BEP20. All right, so all I'm going to do is just copy this wallet address. Okay, I'll just copy this wallet address right here. I'll just tap on this button and copy it, or send this barcode to the sender and tell him that this is a BEP20 wallet address, so that when he wants to make the withdrawal to my account, he's going to use the BEP20 network. Because if he mistakenly uses any network aside from the BEP20, all right, maybe the Binance network, the Bitcoin network, which is right here, he or she can be at a risk of losing that money. Okay, the network has to align. And heading on, we are going to talk about how blockchain is used in cryptocurrency. See, according to Coursera.org, says Bitcoin, Ethereum, and other popular cryptocurrency coins are used to process and record transactions securely. Alright, this technology makes it possible to ensure transparency and protect the financial information and identity of crypto buyers and sellers. So what this actually means is blockchain serves as a server, like a very huge, very big server that is not controlled or governed by any individual or any third party. Okay, it makes sure it processes a transparent transaction and protects the financial information and identity of crypto buyers and sellers. That is what makes crypto very, very, very fantastic. Okay, it's you having full control of your financial activities without the involvement of anybody. All right, so now we are going to head on to learn about various platforms, or familiarizing yourself with various platforms. In this video, we are going to use Binance, because Binance is one of the easiest, if not the easiest, platform you can use to actually trade cryptocurrency. All right, we are going to use Binance because when you get to familiarize yourself around Binance, it is going to be super easy for you to familiarize yourself into other exchanges. All right, so we are going to understand how the platform interface is, the fees attached, the features. When I say features, I am actually talking about things like the indicators, the candlesticks, the order. Talking about order, let's head back to Binance. Right here on Binance, in order to see the various orders that can be used while trading spot on Binance, all you have to do is locate the trade section over here. Let me show you. All right, look at the trade section over here. You will have to click on that. All right, and it's going to bring you to an interface that looks just like this. This was the last coin that I was using. Let's just use it as a case of example. Okay, so when you get to the trade section, it is going to open various sorry, it seems I'm having a little bit of network issue here. It's going to open various cryptos for you, and you'll have to choose the crypto you want to use to trade. All right, so where you're going to find this specific types of orders is right here on the limit section, where it's written limits. Okay, so currently my order is at the limit order. If I want to change it, I'm just going to tap on the limits here, the arrow, and it's going to bring out various orders for me, like the limit order, the market order, stop limit, trailing stop, ECO, and thereabout. But in this video, we are just going to talk about the limit order and the market order, because as a beginner or as an amateur, this is the two most popular orders you are going to understand. The stop limit, trailing stop, and ECO is bit of something that is being used by pros and people that are looking for a long time profit. All right, so the limit order simply means giving Binance let's say an order, giving Binance an order for you to buy an asset when it's in a particular price value, and then selling it, ordering Binance to sell it when it gets to a particular point. For instance, you see the current price of PEP here is 0.00000904. all right, so if I don't want to buy at this limit, maybe I want it to go a little bit down below, all I have to do is just come here where it is written price USDT. All right, here where it is written price USDT, I'll just click on it. So if I click on it, I can be able to edit and impute the amount at which I want to buy. Let's say I want to buy it when it gets to 850. I'll just write 850 over here, and I'll just click on buy PAPE, which is here. If I click on buy PAPE, it is not going to execute this order. Sorry, I forgot to impute the amount of USDT I want to use. Let's say I want to use an amount worth of 100, or let's use 1000, worth of 1000 USDT. So after doing all the settings, I'm just going to click on buy PAPE. All right, if I click, it is not going to actually buy it right now because it is still at 0.0000905. So it is going to buy only when this price here, which is the current market value of PAPE token, when it gets to 850, that is when this order is actually going to execute. All right, so the order book is a war, should I say tug of war, between the buyers and the sellers. Okay, so when it gets to 850, this order is going to be executed, and I'm going to receive a notification telling me your order has been filled. All right, and when I buy low, what I'm just going to do is go to the sell section. Okay, go to the sell section. Remember, we bought it for 850 in our example. What you're just going to do is, we bought it for 850 and we bought PAPE worth of 1000 USDT. Now we want to sell it when it appreciates, because everybody is into trading for the sole purpose of making profit. So let's say it appreciates to 950 within maybe 30 minutes to an hour. So it drops to, it rose to 950. As you can see, if we are using a real coin asset and the value goes to this level, we have actually made a profit of 117 USDT, making us a total profit, a net profit of 117 USDT. So that is just how limit order works. Heading on to market order. Market order is simply giving Binance an order to buy your asset at the present or current market value. All right, so as you can see, this coin here, the PAPE coin, is being traded currently at 0.0000904. So when you come here to the place where it's written USDT, which is over here, all right, you can just type in 1000 USDT, and the moment you, sorry, we're at the buy, sorry about that, the moment you type in 1000 over here, 1000, all you have to do is just click on buy PAPE. Okay, and the market will automatically buy PAPE when it's 0.000903, because this is the current market value of the PAPE token. Okay, so if you're using a market order, the order is going to be executed immediately, unlike the limit order when the market will execute when it reaches the value which you inserted. All right, so that is just all about the order and order book. This is where this is called an order book. Okay, let me indicate it for you. This is an order book. This is the buyer section, this is the seller section, and this is the current price. All right, I think that is all about order. Right, heading on to the next topic, we are going to talk about setting up trading strategies, how you can strategize and set up a strategy which you can be using to actually make profit or understand the market. All right, there are different trading strategies you can be able to use to understand the market, the movement, emotions of the market. There are strategies like the day trading, the swing trading, also known as the weekly traders. All right, the position trading, scalping trading, range trading, trend following. They are the main reversion, the traders that use fundamental analysis. There are those that use technical analysis, the breakthrough. There are a lot of ways you can be able to engage in trading by choosing your trading strategy. But for the sake of this video, I don't want this video to get so long, so we're just going to talk about the popular ones, which is the day trading, the scalping, swing method trading, okay, and maybe range trading. Okay, so day trading is, or day traders are simply people, okay, traders that actually collect their profits by trading various crypto assets across against each other, and actually generating profits every 24 hours. Okay, they are the swing traders. Swing traders actually, study the markets. When they study the markets, look at how the charts are, the 24 hours highs and 24 hours low, then they are going to actually buy when assets are low, and they are going to wait for a little bit of time. Okay, unlike the trend following or range traders or investors, they don't waste so much time, maybe a couple of weeks or two. Then when it goes back up, when the asset starts to gain momentum to the bullish trend, they actually sell their crypto assets. And the scalping method, one of the wisest traders I can see, they take advantage of slight price differences in the market, okay, and make profit. For instance, if PIP token is being traded at 900, okay, if it's being traded at 900, this specific set of traders are just going to sit back and wait. When it goes down to, let's say, 880, they'll just buy. Okay, but before buying, they are going to actually analyze the markets, use their they're going to use their indicators to actually know if the market is going to sell anytime soon. So when they buy at 850 or let's say 880, they're just going to wait for a slight movement that is going to trigger this PIP token back to 900, so that they can be able to sell and just get a little bit of profit. And let me give you an example. For instance, they bought it when it was 850, okay, and they put a price and they put an alert when it gets to 900, it should be able to sell. And let's say they bought PIP token worth 1000 USDT. All right, so when they want to sell it, remember they bought it when it was 850, and they bought worth 1000 USDT, and now it's 900. Or let's just use the current price. It is 899. So 899. As you can see, they have made a profit of $57 within a short period of time, and they can do this twice, thrice, 4 times, 5 times in a day. And imagine $57 times 5. That is, we are talking about 260 or so dollars in a single day using this capital. All right, and that is all about the scalping method. Okay, so as beginners, you can just use these 3 methods until you familiarize yourself with crypto or the exchange platform you're using. Then you can be able to actually go into the breakthrough trending, the technical and fundamental analysis, and all of that. All right, so now we are going to go to understanding charts. All right, we are going to move ahead to how to understand charts and indicators. So every crypto asset has its own chart. Okay, every crypto asset has its own chart. This is what chart is all about. This is, whenever you hear the word chart, this is what's going to come to your mind. Okay, this is the candle pattern, also known as the chart pattern. All right, it is the movement of the prices of value of commodities in a given period of time. Okay, as you can see, this is the 1 day time frame. Okay, if I want, I can turn it to the 4 hours or the 1 hour time frame, depending on the type of trade I want to engage in. Okay, and this is called the candlestick. Let me indicate it for you. This is called the candlestick. The green one is the bullish candlestick, indicating a buy signal, and these red ones are the bearish candlestick, indicating a sell signal. Okay, when I say sell, I mean the drop down in value of crypto asset, and when I say buy, it means the rise or the uptrend of value in crypto assets. All right, so understanding chart is all about knowing these candles. They all have names. Okay, they have names that they normally use, and they form patterns, and it is up to you to use indicators, various indicators. Let me show you the indicators. Right, we have the MA, right, the margin average, we have the EMA, the Bollinger Band, SAR, the MACD, and all of that. In another video, I'm going to show you how to actually use this average to predict or determine where the market is heading to, so you can be able to buy low and sell high. As we all know, spot trading is all about buying an asset when it's low and selling it when it's high to actually achieve profits. Okay, so all you have to know is how to use these indicators and how to use this candlesticks to determine where the market is heading to. And I think that is all you need to know for now about Binance spot trading in general and cryptocurrency. And in another video, we are going to talk about how to set limit position, and most of all, how to manage your emotions. All right, never get greedy in the game of cryptocurrency or in the game of cryptocurrency trading, because the greedy ones always end up at the losing side. I have been there. I am a living witness. Okay, so please, whenever the market goes down and you have actually accumulated profits, before it begins to reverse, just quickly sell out and just get your profits and just leave the market and wait for it to go back down. And I want you to start small, not because you can start big, but because you are actually getting to know the interface of these platforms or platform you're using. So you should start small but think big. All right, and diversify your portfolio. When I say diversify your portfolio, I mean you should spread your trade across different assets and trading pairs. All right, you just because you know BTC doesn't mean you are just only going to be using BTC all the time, or just because you know Solana doesn't mean you're going to be using Solana all the time. You can use, there are thousands of crypto assets that are being appreciated, that are appreciating every day. So you can just use any, get to explore and see the behaviors of different crypto assets. All right, and all I want to tell you is to stay disciplined, and most of all, be patient. Okay, crypto is not for the less disciplined. All right, and it's not for the people that are not patient. Imagine buying an asset of 1000 USDT and it begins to depreciate, and just because you don't want to lose, or just because you are scared that the asset is on the run of losing and it's making you lose because your 1000 USDT has just turned to 800 USDT, you're thinking it's not going to go back up, then you just sell the asset and buy USDT. USDT is a stable coin. It cannot be used, or even if it can, it's going to take a lot of time before USDT actually moves. It is not a volatile coin. So imagine doing that, and after selling your asset to get USDT, the asset you sold begins to go up in a bullish direction, and you've already sold the asset. You see, you've lost because you've lost patience and discipline. All right, remember, profitable trading requires time, effort, dedication, focus. All right, before you can build a strong foundation, and let's say generally, gradually, and refine your skill. I hope this video helps, and please don't forget to like and subscribe so that others can get to engage and enjoy the benefits or the important factors of this video. I hope this helps, and stay tuned for my next video. Right, have a nice day, be safe, ciao.